Good evening, this is Ryan Mallory for Shareplanner.com. Today is November 16th, 2010. Pretty eventful day in the markets. We had a major sell-off, the likes that we haven't seen in quite some time. The final tally on the day was the Dow was down 178 points, the Nasdaq was down 43.9 points, and the S&P was down 19.4 points. So heavy selling across the board. I think the declining issues were basically like 9-1, so a very, very heavy selling that we saw today. I knew we were in trouble, quite honestly, from the very beginning, because I was looking for the 20-day moving average to be a support level in the market, as you know from the previous market videos that I've done. And then when we gap below that moving average, that's a huge blow to the bulls. Not only are you tearing through support, you don't even give the bulls a chance to fight the support level, and automatically that becomes a resistance level. And with the bears having momentum, it's a hard feat to ask the bulls to reclaim that kind of a support level when it was broken so easily. Basically, where we ended up at today was right here in the bottom end of the consolidation from mid-October. We bounced off the lows and ever so slightly rallied. Not very much, and not much to write home about, that's for sure. Some will say that the October consolidation is marked by this low. I believe that is your lower low in the market, to where if we break below here, you're creating a lower low. We haven't done that yet, but I think there's enough handwriting on the wall here to where the charts are damaged pretty significantly. And quite honestly, you know, the entire trend itself, we haven't closed below the 20-day moving average. So the very fact that we did that is a huge sell signal for the market in general. I closed out of most of my long positions. The only two that I have left is TICC and Harris Corporation, HRS. Harris Corporation actually fared pretty good. It closed down less than 1% on the day, 0.9%. I'll take that any day. My other two shorts, Adobe was down 1.66%, and TFSL was down almost 2%. So not bad overall. My two short positions, I was down overall about 0.5%, a little bit more than that. So I was able to weather the storm quite well. I got out of Baidu, Goldman Sachs early on. Hertz I was stopped out of. Kroger I got out of that one immediately. McDonald's I got stopped out of early on. SPY I just decided to get out after it got below my stop loss. There was no questioning that. So pretty busy on the sell side for me today. I'm not tempted to add anything new here from a long standpoint. Let's look at it from a Bollinger Band perspective. Let's see here. Not sure where that chart's at, actually. Let's go ahead and just add them here. You can see we're not even hitting the bottom end of the Bollinger Bands. We could go down as low as 1163 before hitting them. Particularly though, when you're trading off these Bollinger Bands and you have a push below that 20-day moving average that represents the midline of the BBs, you're going to probably hit the bottom end of it as well. So don't expect the market just to turn around tomorrow. It could, and we've seen that before in the past, but I wouldn't be putting a lot of capital to work on that premise. A word for short sellers that are looking at big profits. I know there's folks in our chat room today with huge gains in FSLR and PCX and some others. My word of caution there, if you haven't done so already, I take half off the board there. Many times this year, the shorts have had everything going on in their favor, and out of the nowhere, the bulls will just rally 200 points right against you, no questions asked. Very little opportunity to cover those short positions, and you don't want these profits from today to be just completely eroded away. So if you have the profits, you know, some hefty profits in hand, take at least half off the table, tighten up the rest. If you don't have a whole lot, at least preserve what you have by putting your stop loss up to break even. But and I'm not saying that you can't add more short positions on weakness. Just preserve what you have. I mean, that's a big part of it. And but don't get too euphoric. I mean, this was the big move today, as well as the previous 2 days. So the rally's starting to mature a little bit before we might get a little bit of a dead cat bounce. So you want to be careful about saying, okay, I'm going to go from being 10 or 15% short to, all right, let's go 130% short tomorrow because the market's clearly going down. You don't want to do that because that's where people get burned. That's where the crowd starts jumping in at. Instead, if you have a good amount of short positions, try to secure those profits. And if you could believe that the market's going to continue to go down, then add some on a rally or a pop. Because markets when they sell off hard like this, they do tend to bounce in the short term. So always be aware of that. And oftentimes when these stocks get really oversold, the bounces are just unmerciful. So. But kudos to those who were short in the market today. Obviously, I wasn't in terms of my long to short ratio, but I feel good to have escaped it as well as I did. So let's look at the weeklies and see what we have here. The one thing that bothered me a little bit about this rally, or I guess quite frankly surprised me, is the fact that we just busted right through this 200-week moving average, and historically, it has acted as a strong level of support and resistance on both sides. You have it here where it bounced, and then here where it met resistance here again. I guess you could say that if you look back at February, March of 2008, that it did go below it and then pop back up. So there's a reasonable expectation that the bulls might be able to regain their footing here. But you also got to remember that this coincides with the Fibonacci 61.8% retracement level, which is going to act as resistance here. So a lot I'm throwing at you there, but I want you to think about all these things and come up with an opinion on where you think this market's going to be going. I don't have a crystal ball, so I can't tell you with any certainty. But I can tell you this: I'm very skittish about going, totally long or even mildly long at this point. There seems to be a change in the fundamental behavior of this market here, where something that we haven't seen from a bearish standpoint since this trend began back in early September, and that's something you got to pay attention to and be cognizant of. And with that said, I'm going to wrap it up there, and if you guys have any questions, feel free to email me. I will be going to Las Vegas tomorrow and being there throughout Saturday. However, I will have my laptop with me. It's not as good as my, standard computer setup, but it is functional. I can trade off of it. I can hit the chat rooms. I even thinking about maybe doing live charts from Las Vegas if I can get the setup to work correctly for me. So the very good chance that I'll be fully functional. It's just the convenience factor of being in your own trading office is not as accommodatable, I guess you would say. So I will be there. I'll be posting. It should be pretty exciting. Maybe I'll take some camera footage of the expo so you guys can see what's going on. I got interviews lined up with Harry Boxer, Tim Sykes, with Michael Cavell, so I'm excited about those, and I'll be posting the transcripts of those interviews as well as the audio perhaps. And then I'll be on doing some work with the Money Show, and there should be maybe like a broadcast there where they're interviewing me out there. So I think that takes place tomorrow, and if I get a link or anything ahead of time, I'll shoot you guys that over in the chat room or just do a post on it. Alright, that's going to do it for now. Take care.